Welcome back to the podcast. Today, we have an exciting and timely conversation lined up for you. We'll be diving deep into the transformation of American retirement savings, the current volatility in the financial markets, and the latest innovations in energy. Joining us today is our expert guest, who has been closely following these trends. Thank you for being here.
Thank you for having me. It's great to be here, and I'm excited to discuss these pressing issues.
Let's start with the transformation of American retirement savings. It's fascinating how offshoring and changing economic conditions have reshaped this landscape. What are some of the major shifts you've observed recently?
Absolutely. One of the most significant changes has been the rise of target date funds. These funds automatically adjust the asset allocation as the retirement date approaches. They've become the go-to option for many 401k plans, with about 40% of new contributions going into these funds.
That's a substantial percentage. But how does offshoring play into this transformation?
Well, as companies look to cut costs, many have moved their pension obligations overseas or transitioned to defined contribution plans. This shift has placed more responsibility on individuals to manage their retirement savings. The average American is now facing a more complex landscape where they need to be savvy investors.
Right, and with the rising cost of living and inflation, this complexity can be daunting. Are there specific demographics that are affected more than others?
Definitely. Younger workers, particularly those in gig economy jobs, often lack access to employer-sponsored retirement plans. This situation forces them to rely on personal savings and IRAs, which can be inconsistent. Studies show that only about 30% of workers aged 18 to 34 are saving adequately for retirement.
That's quite alarming. Shifting gears a bit, let's talk about current market volatility. We've seen quite a bit of turbulence recently, right?
Yes, indeed. The markets have been on a roller coaster ride. Investors are grappling with the Federal Reserve's interest rate hikes to combat inflation, which have created a lot of uncertainty. The Fed's decision to raise rates by 25 basis points last month has led to fears of a potential recession.
And then there's the AI bubble everyone seems to be talking about. It feels like there's a rush of investment into AI technologies, which some analysts are calling unsustainable. What's your take on that?
It's a double-edged sword. On one hand, AI has the potential to revolutionize industries, but on the other hand, the hype around it has inflated valuations. Some companies are trading at multiples that don't make sense based on their current earnings. This could lead to a significant correction if the market sentiment shifts.
That sounds like a classic bubble scenario. And let's not forget about emerging markets. What risks are we looking at there?
Emerging markets are facing their own set of challenges. With rising interest rates in the U.S., capital is flowing out of these markets, leading to currency depreciation and increased debt burdens. Countries like Turkey and Argentina are particularly vulnerable, and there's concern about how these economies will weather the storm.
It's a complex global financial web we're navigating. Now switching gears again, let's dive into energy innovations. I've heard about some exciting developments like Bitcoin heating. Can you explain how that works?
Sure. Bitcoin mining requires a significant amount of energy, and some innovative companies are finding ways to repurpose that heat for residential and commercial use. For example, there are projects that capture the waste heat from mining operations to warm buildings, which can be a sustainable solution if managed correctly.
That's a fascinating use of technology. And what about nuclear energy? There seems to be a renewed interest in nuclear expansion lately.
Yes, there is. As countries seek to transition to cleaner energy sources, nuclear energy is being reconsidered as a viable option. New technologies like small modular reactors, SMRs, are emerging, which promise to be safer and more efficient. Countries like Canada and the U.S. are investing in these technologies as part of their energy transition strategies.
It's intriguing how these innovations could play a role in addressing climate change. What are your thoughts on the balance between these energy sources and the ongoing demand for fossil fuels?
That's a critical point. While renewable energy sources are essential for a sustainable future, fossil fuels still play a significant role in the global energy mix. The transition will take time, and it's vital to ensure energy security while we innovate and scale up cleaner technologies.
Absolutely, it's a balancing act. As we wrap up our conversation, what key takeaways would you want our listeners to remember about retirement savings, market volatility, and energy innovations?
I'd say it's crucial for individuals to be proactive about their retirement planning, especially in today's uncertain market. Diversifying investments can help mitigate risks. As for energy, staying informed about innovations and their implications for climate change will be essential in navigating the future.
Great insights. Thank you so much for sharing your expertise with us today. Before we sign off, do you have any resources or actions you'd recommend for our listeners?
Absolutely. I'd recommend checking out the U.S. Department of Labor's website for information on retirement savings options, and also exploring platforms like Investopedia for more insights into market trends. And for energy innovations, organizations like the International Energy Agency provide valuable reports and data.
Thank you. That's very helpful. And for our listeners, if you found today's conversation insightful, please share this episode with your friends and family. Don't forget to subscribe and tune in next week for more discussions on the topics that matter to you. Until next time, stay informed and engaged.
Thank you for having me. It's been a pleasure.
Likewise, take care, everyone.